Good day, class. Welcome to P1 revision session number 2. In this session, we're going to look at part B of the syllabus, which is internal control and review. Now, the main areas, we're going to do 2 model questions under this particular area. But the main areas that should be covered when we are studying internal control and review are management control systems in corporate governance, internal control, internal audit and compliance in corporate governance, internal control and reporting, and management information in audit and internal control. So, for example, under internal control, we would really need to know what are the objectives of an internal control system. What are the benefits of an internal control system? What may be defined as a sound internal control system? What are the roles and responsibilities in risk management and in internal control of the various stakeholders? We should also be familiar with the COSO framework. Right? What are the elements of an internal control system based on COSO's classification? For example, they have classified it saying there's a control environment, there's risk assessment, there are control activities, information and communication, and monitoring. Now, at what levels would you set up an internal control system? At the tactical level and at the operational level. What is deemed to be good information? Good information, we should be familiar with the mnemonic, must be accurate. Now, what are the characteristics? Information characteristics. Right? And also at the strategic level and at the operational level. Furthermore, other areas we should need to understand. What is the role of an internal audit department? What is in need for internal audit? What are the factors protecting auditors' independence? So these are just a few of the things. Also, potential ethical threats and reporting on internal controls to shareholders. Right? So these are the core areas that we must revise before coming to our actual session. And then we're going to look now at 2 model questions. One from the supplementary pilot paper and one from the June 2008 paper. Now the first, from the June 2008 paper, question number 2 it was, on auditor independence. Let's read. Let's look at our requirements first and then go into the question. Required. Explain why auditor independence is necessary in auditor-client relationships and describe 3 threats to auditor independence in the case. B. Anne is experiencing some tension due to the conflict between her duties and responsibilities as an employee of Fillmore Pierce and as a qualified professional accountant. Required. 1. Compare and contrast her duties and responsibilities in the 2 roles of employee and professional accountant. 2. Explain the ethical tensions between these roles that Anne is now experiencing. And C. Explain how absolutist or dogmatic and relativist, which is pragmatic, ethical assumptions would affect the outcome of Anne's decision. Right, so quickly, let's look back at the requirement before read it. A. Explain why auditor independence is necessary in auditor-client relationships and describe 3 threats to auditor independence in the case. B. Anne is experiencing some tension due to conflict between her duties and responsibilities as an employee and as a qualified professional accountant. Required. Compare and contrast her duties and responsibilities in the 2 roles of employee and professional accountant. 2. Explain the ethical tensions between these roles that Anne is now experiencing. And C. Explain how dogmatic and pragmatic ethical assumptions would affect the outcome of Anne's decision. So let's read the scenario. It was the final day of a 2-week-long audit of Van Buren Company, a long-standing client of Fillmore Pierce auditors. In the afternoon, Anne Hayes, a recently qualified accountant and member of the audit team, was following an audit trail on some cash payments when she discovered what she described to the audit partner, Zachary Lincoln, as an irregularity. A large and material cash payment had been recorded with no recipient named. The corresponding invoice was handwritten on a scrap of paper and the signature was illegible. Zachary, the audit partner, was under pressure to finish the audit that afternoon. He advised Anne to seek an explanation from Frank Monroe, the client's finance director. Zachary told her that Van Buren was a long-standing client of Fillmore Pierce, and he would be surprised if there was anything unethical or illegal about the payment. He said that he had personally been involved in the Van Buren audit for the last 8 years, and that it had always been without incident. He also said that Frank Monroe was an old friend of his from university days, and he was certain that he wouldn't approve anything unethical or illegal. Zachary said that Fillmore Pierce had also done some consultancy for Van Buren, so it was a very important client that he didn't want Anne to upset with unwelcome and uncomfortable questioning. When Anne sought an explanation from Mr. Monroe, she was told that nobody could remember what the payment was for, but that she had to recognize that real audits were sometimes a bit messy and that not all audit trails would end up as she might like them to. He also reminded her that it was the final day and both he and the audit firm were under time pressure to conclude business and to get the audit signed off. When Anne told Zachary what Frank had said, Zachary agreed not to get the audit signed off without Anne's support, but warned her that she should be very certain that the irregularity was worth delaying the sign-off for. Right? So he warned her that she should be very certain that the irregularity was worth delaying the sign-off. It was therefore now Anne's decision whether to extend the audit or have it signed off by the end of Friday afternoon. Required. So first one, why is auditor independence necessary? And 3 threats in this particular case to auditor independence. B, it says explain why B, they tell you more or less that there is a conflict between her as an employee of Fillmore and as a qualified professional accountant. Requirement, compare and contrast her duties in the 2 roles as employee and a professional accountant. 2, explain the ethical tension between these roles that she is now experiencing. And C, explain how a dogmatic and a pragmatic ethical assumption would affect the outcome of Anne's decision. Right? So let's look at our ideal solution. Why is auditor independence necessary? And 3 threats to auditor independence. The importance of independence. Auditor independence. The auditor must be materially independent of the client for the following reasons. 1, to increase credibility and to underpin confidence in the process. In an external audit, this will primarily be for the benefit of the shareholders, and in an internal audit, it will often be for the audit committee that is in turn the benefit of the shareholders, that is in turn the recipient of the internal audit report. Right, so our first main reason, auditor independence. First reason we had said, to increase credibility and to underpin confidence in the process. So in an external audit, it is primarily for the benefit of shareholders, whereas in an internal audit, it will often be for the audit committee that is in turn the recipient of the internal audit report. Second reason why auditor independence is important. It is important to ensure the reliability of the audit report. Any evidence of lack of independence or capture has the potential to undermine all or part of the audit report, thus rendering the exercise flawed. Right, so our first one, as we said, to increase credibility and underpin confidence in the process. The second one is to ensure the reliability of the report, because if there's any evidence of lack of independence, then clearly the entire audit report will be rendered as a flawed exercise. The third one, and it's not limited to these are the 3 main points as to why it is important. So our third, it is to ensure the effectiveness of the investigation of the process being audited. An audit by definition is only effective as a means